Nokia shares are tumbling after first quarter estimates, or rather first quarter earnings missed estimates. We partner now with the FT to bring you Lex on Bloomberg. You get a sneak peek at the Financial Times' flagship column a day early. Sarah O'Connor is joining us now live from London. So Sarah, I mean, no one expected a blowout quarter from Nokia, but the figures are worse than expected. Why is that?
Yeah, that's true. I mean, for investors, Nokia is always a bit of a roller coaster ride. Last time they released results, the shares went up 10%. This morning, it looks like they're down about 12%. It's very hard to really know what's going to happen from quarter to quarter. And the key thing here that's really got people concerned is that their profit outlook is down. They've reduced their operating margin forecast for the year. And the reason for that is the big kind of question mark that always hangs over Nokia, or has for the last few years, which is how can it compete with the likes of the iPhone, BlackBerries, these very high-end smartphones that have really grabbed the consumer's attention. Nokia is just really struggling to find a way to compete with that, and that's hitting its profits.
Well, we do know that competition is heating up. I mean, you just mentioned Apple's iPhone. Of course, Google has Android. But why is Nokia struggling so much in the high-end area? I mean, did they just make a bad bet in wanting to do more volume for, say, I don't know, phones that cost 20 or 25 euro?
I'm not sure that it's quite that. I mean, I think they were aware that smartphones were going to be important, but the problem is that this company just isn't really geared to the smartphone world. They've always been brilliant at hardware, making really good, decent phones that work well and are reliable. The problem with smartphones is that the value now has moved to software and to the operating systems, and that's something that Nokia didn't have much strength in. Apple just zoomed ahead with a much better system. So for a long time they've been developing their own operating system. It's called Symbian. No one's very impressed with it. They promised that this year there'll be a revamp. There are rumours that it's being delayed. There's just a lot of uncertainty. And why does this matter? Well, I mean, smartphones, you know, aren't actually the majority of the market for phones by no means, but they are where the profits are at. This year, analysts reckon that about half of industry profits will be made through those smartphones.
Well,
so it's important that Nokia finds a way to compete.
Nokia still, though, is, Sarah, the biggest mobile phone maker in the world. I mean, in a lot of underdeveloped countries, that's the product that people are using. So what about the rest of the world? Maybe Nokia is losing market share in the US and in Europe, but is growth in other areas likely to help them out this year?
Exactly. I mean, it's quite easy to get fixated, isn't it, on this hot new end of the market and forget that Nokia is, as you say, it's the biggest phone maker in the world. It dominates in big emerging markets, which are important and do create a lot of growth, which is compensating somewhat for its struggles in the developed world. I mean, one possible opportunity for them is to sort of democratize the smartphone, because they have this breadth and a very low kind of cost manufacturing base. They could start to make smartphones that people in emerging markets might want to buy that, you know, could no way afford to buy something like the iPhone. The big question, of course, is whether that's profitable.
Sarah, thanks so much for your time. Sarah O'Connor joining us there from the FT from London.